Hello and welcome back. Thank you so much for tuning in. In January, there was a massive surge of 136% month-over-month in job cuts or layoffs in the United States. As I mentioned in my weekly recap post on Substack, US-based employers announced 83,307 job cuts, and this is the most in 10 months. A month prior to that, in December, just for comparison purposes, there were 34,817 layoffs. The job cuts are driven primarily by increased input and labor costs, material costs, as well as expected decrease in consumer and business activity. Companies that announced layoffs are largely driven by the need to cut costs in an increasingly uncertain environment. Among the companies that announced layoffs in January of 2024 were BlackRock, PayPal, Duolingo, Wayfair, eBay, Citigroup, and many more. Also, I asked my Substack readers whether they believe that we will see more layoffs this year, given that January wasn't exactly a great start. And I do want to thank every single one of you who participated in that poll on Substack. And based on the results, 95% of those who responded believe that layoffs will continue, and only 5% feel that we have already seen the worst of it. So not exactly a bright outlook. Financial companies lost the highest number of jobs in January, followed by the tech sector. So what is going on here, and why are companies laying off so many employees when the Federal Reserve is telling us that the economy is very strong and that inflation is decreasing and everything will be fine? Well, there are several reasons why companies typically lay off employees, including seasonality, mergers and acquisitions, outsourcing to save costs, AI, cost reduction, business closing, or decreased operations. But what was the main reason in January? In my opinion, the main goal was to cut costs as the result of broader trends in the economy that point to a slowdown in consumer demand and consumer spending as consumers are taking on more and more debt, as well as there is a buildup of uncertainty. Even though Janet Yellen has already announced that we reached soft landing, I don't think anybody believes that. And of course, the Federal Reserve is almost ready for the next QE cycle at this point. And that is likely not the sentiment that is shared by these businesses. It's quite the opposite. You just don't cut 83,000+ jobs in a month when you expect the economy to do well. The timing of these massive layoffs is very important too. Companies waited until after the year-end to do so, and this is because it would have been a risk to their stock price. Layoffs are never a good sign. It is a significant concern for stakeholders and for investors. Many publicly traded companies report their 2023 year-end results later in February, so I believe that we will see another round of layoffs at some point after they file their 10K reports with the Securities and Exchange Commission, but before the first quarter ends. That is my prediction. I do think that this trend may continue until the second quarter, depending on the industry, of course. Right now, it is driven by the financial and tech sectors. We will also have to see when the Federal Reserve decides to cut rates. The sooner the Fed cuts rates, the lower cost of debt will become for these companies that are already struggling. And of course, this is something that may help limit any future layoffs. So these companies will greatly benefit when the rate cuts do happen, and that is likely something that they're waiting for. When we discuss layoffs, we have to keep in mind what the Federal Reserve may do this year. Definitely don't expect rate cuts until later this year. This week, the Federal Reserve Chair Jerome Powell said that it is highly unlikely that there will be cuts as early as March. First, the Fed needs to be confident, he said, that inflation is moving towards the target rate of 2%, but the path forward is uncertain, said Powell. Take a look.
But inflation is still too high, ongoing progress in bringing it down is not assured, and the path forward is uncertain.
There is now a nearly 59% probability of a rate cut in May. That's the soonest, and a 54% chance the following month in June. There is an 80% probability that the Fed will hold rates unchanged during the meeting in late March. During the same press conference, Powell said that the United States economy hasn't reached soft landing just yet. He contradicted what Janet Yellen said just 2 weeks ago, and he did say that it is too early to declare victory. Here's a clip.
I guess just as a quick follow-up, do you feel comfortable at this point saying the economy has reached a soft landing, or is that part of looking for more confidence?
No, I wouldn't say we've achieved that, and I think we have a ways to go. Inflation is still, core inflation is still well above target on a 12-month basis. 12 months is our target. Certainly, I'm encouraged, and we're encouraged by the progress, but we're not declaring victory at all at this point. We think we have a ways to go.
But regardless of when the Federal Reserve cuts rates, multiple economic factors that have already been set in motion by those 11 or 12 consecutive rate hikes cannot be stopped overnight. So that is an important fact to keep in mind. On Friday, February the 2nd, a truly stunning job growth report was released that completely contradicts everything else that we're seeing that is going on in the economy, including the data that I just shared with you in this video earlier. I quickly alluded to it in my weekly recap post here, but effectively, if something doesn't look right, if it doesn't smell right, just go ahead and trust your intuition. The numbers don't add up, and we simply cannot have a 136% surge in layoffs month over month and then believe that the job numbers are as good as they're being reported. I won't get into this issue here in this video, but you are welcome to read more about that in my latest post. You will find everything linked in the description below. As always, thank you so much for watching. Let me know in the comments below if you expect future layoffs, if you expect layoffs to increase and why. I would love to hear from you as always. Please go ahead and show your support, give this video a thumbs up, share it, and subscribe both on Rumble and YouTube. I would love to have you back for my next one. And a big thank you to those of you who support my work by becoming subscribers on Substack. I truly appreciate every single one of you. Thank you. I will see you in my new one tomorrow. Enjoy the rest of your day. Enjoy your weekend. Bye for now.